again, the dollar has been overvalued for basically reasons that aren't going to recur, and that we're going to see much more inflation as we go toward the end of this year and into next year.
Welcome to Rethinking the Dollar. Today's guest, Mr. James Turk, founder of GoldMoney.com, joins us to give us his thoughts on the economy today. The last time James joined us, we were discussing his most recent book, The Money Bubble, co-authored with John Rubino, in which James gave us an inside take on how the inflation of asset bubbles caused a problem in 2008, 2009, and how we could be on the verge of something a lot worse. So, James, welcome back to Rethinking the Dollar, and happy 2016 to you.
Yeah, thanks. You too, Mike.
I want to get into some of the financial market questions. Right now, since 2016 has been in, a lot of the global equities have been up and down. It's been a roller coaster ride for a lot of people when it comes to investing. Give me your thoughts on, what's going on and what can we probably expect throughout the remainder of this year.
Yeah, what's clear is that there's been a lot of volatility so far this year, and I think that's likely to continue as we proceed through the year. These things come in cycles. The last time we had a deep cycle was back in 2008. Before that, perhaps it was 2000, 2001. So, every few years you can expect these kinds of cycles. And when they do occur, they do bring a lot of volatility with them. And that's what we've seen so far this year. So, looking for as we go forward to the rest of the year, I think we can expect a lot more volatility in the markets. Stock market looks way up there. But the question is where is the real overvaluation? In my mind, the real overvaluation is in the dollar itself. And that's what I think is likely to be the big story in 2016, that the dollar is going to decline against a variety of different assets, and including precious metals. And that means loss of purchasing power for dollar holders.
Mm-hmm. Now, how does that quarter point raise at the end of December have anything to do with, how things are kind of starting to unravel a little bit, or what are your thoughts?
Well, that quarter point raise was announced many, many years, and it's been long anticipated, and it finally arrived. So, as the saying goes, buy the rumor, sell the news. And it really didn't have much impact at the end of the day. Mm-hmm. But the point now is that with the economy weakening so much, just over the last couple of months, the talk is that they're not going to do any additional raises this year. And some people are even starting to say they might try easing again in order to try to get the economy moving along, particularly this being an election year. Yeah. Typically the Fed doesn't want to do anything that would damage the economy, and if anything, it would help the economy, and by their thinking anyway. So I wouldn't expect any more interest rate rises this year.
All right, now you hinted at the dollar kind of being something to keep an eye on in this year, especially in regards to currency or commodities and whatnot. So give us your take on the dollar. Rethinking the dollar. You kind of, in the last episode we talked, you actually gave us the definition of a dollar. Now, what are some things to really pay attention to now in relation to the dollar for this year and going forward?
Well, let's look two ways on this, Mike. First, let's look internationally, and then secondly, we'll look domestically. Mm-hmm. Internationally, it's a question of what the dollar buys versus other countries in the world. And over the past 6 to 12 months, the dollar has been relatively strong. And the reason is that there have been so many economic problems elsewhere. There's been a weak economy in Asia, weak economy in Europe. The central banks in those countries, Japan, they're inflating their currency, debasing the yen. The European Central Bank is trying to inflate the euro, debase the euro. So what's happened is a lot of that purchasing power has come out of Asia, come out of Europe, and has gone into the dollar, and it bolstered the dollar relative to those currencies over the last 6 months. I think that shift is probably going to be is over, and it's probably going to be moving the other way. So I would expect the dollar's probably going to lose relative to the other currencies, despite the fact that they've still got those same problems. The problems are also mounting now in the United States as well. So a lot of that money might be returning home. Mm-hmm. Looking at it domestically, we've been pretty lucky over the past year or so with falling crude oil prices. You can get gasoline again at under $2 a gallon. That hasn't happened for a long time. So we've been sort of put to sleep about the potentials for higher inflation and higher prices. And I think that's the thing that we have to be worried about in the year ahead. Crude oil is not going to stay under $30 a barrel forever. Gasoline prices are going to start coming back up. And the lower gasoline prices haven't really helped the economy that much. So imagine what the impact of higher gasoline prices are going to do to the economy as we move toward the end of this year. So I think domestically what we have to do is recognize that, again, the dollar has been overvalued for basically reasons that aren't going to recur, and that we're going to see much more inflation as we go toward the end of this year and into next year.
All right, now speaking on currencies, like I've been keeping an eye on a lot of other currencies like the Canadian dollar, Argentinian peso, and the Brazilian real, and how those countries are kind of experiencing inflation right now, but just because because the dollar is strengthening, their currencies are being devalued for the most part. What are your thoughts on that? Like how's the suffering of these other countries really going to, or how is it a good example for what could and probably will happen when the dollar has its turn on the downside?
Yeah. Some of those countries, like you've mentioned, Argentina and Venezuela, South Africa, the inflation rates there are quite high. And if you can't earn enough income to keep up with the higher prices, you're ultimately going to be lowering your standard of living, and nobody wants to do that. So we have to be very much aware of what's going on with inflation. And I do think inflation is going to start picking up in the United States. But the big picture, Mike, is that the monetary system that we work today is called one of floating currencies. And these currencies do float against each other in the sense that they bob up and down relative to one another. In other words, exchange rates go up and down relative to one another, depending on what central banks are doing in any one country. If one country is tightening monetary policy, that currency might strengthen. If they're loosening monetary policy, that currency might weaken. But the point is that all of these currencies are losing purchasing power over time, and we have to measure that loss of purchasing power. And the best way to do that is with gold and silver, because they've been money for 5,000 years. They continue to operate as money in the sense that they are useful for measuring the prices of goods and services. And an ounce of gold today buys the same amount of crude oil it did 50 years ago. Actually, it buys a little bit more because crude oil is sort of cheap at the moment. But the point is that they preserve purchasing power, and that's what national currencies are not doing at the moment. Now, in normal market circumstances, you earn interest on a national currency above the inflation rate, so that it makes sense sometimes to save dollars or save euros or save yen. But in today's world, interest rates are near zero everywhere, and you're not earning any money on your bank deposit. So you have to look for alternatives as a way of preserving your purchasing power, and that's where I turn to gold and silver as a way to do that.
Right. Now, you mentioned about earning interest. Now, let's get into some of the monetary policies. I know that beginning of the year, the whole European Union, Mario Draghi, pretty much ensure that the euro, he's going to do whatever he can to make sure the euro continues to have some life within it. And so that means quantitative easing and buying assets or whatever they call it doing. So how do you think these monetary policies between Draghi, promising that the euro will stay afloat, and Janet Yellen increasing the interest rate or whatnot, how will these monetary policies and these decision makers over money, how would that become a problem this year, even more so than it already has in the financial markets?
Yeah, the underlying problem that Europe has, the United States has, and most countries around the world have, is there's too much debt. And what central banks are trying to do is debase their currencies to make the burden of that debt less of a problem for the countries that owe that money. So in the United States, for example, the national debt now is about $19 trillion. If interest rates were to rise 1% over the course of a year, that would increase the interest expense approximately $190 billion, maybe a little bit less. And as a consequence of, say, a fair rate of interest, 5 or 6%, you would increase the interest expense burden of the U.S. government by $1 trillion. And the government only has $3 trillion of revenue during the course of the year. They're not going to cut spending in other areas to pay that extra interest expense, which means they'd go out and borrow more, interest rates would go up, and then you go into a hyperinflationary spiral. So what they're trying to do is to keep this present monetary system afloat. That's the bottom line. And it's not sustainable. And I think the thing that everybody needs to consider is that, I mentioned before that gold has this 5,000-year history. And there have been monetary problems before throughout history, and eventually we always come back to gold because people recognize what the advantages are. We've been off the gold standard in the United States since 1971. We recognize all of the problems that we now have when you eliminate the discipline that gold imposes on the monetary system. So when this present system changes, we're going to go back to gold in some way. And the question is what do we do to protect ourselves in order to be prepared for these changes that are coming? And again, if gold is going to be at the center of the new system, you have to own some gold.
Right. Now, as part of the whole, what do you do with, with your savings, your earnings, you can't really put in the bank because you're not really getting any, return on it. There's a big push now, I guess, to keep the system afloat and the talk of negative rates. And so outside of America, there's several countries, I think Japan just recently did some things like that. So, how will the negative rates, push, increase? And do you see more countries beginning to, go below zero and really try to get people to spend and just to keep things afloat?
Yeah, even the vice chairman of the Federal Reserve in a speech just recently said that they're starting to consider negative interest rates for the United States. Mm-hmm. What that means is that when you have money in the bank, you have to pay the bank money in order to keep your money there. Instead of the other way around, where they use your money and make loans and stuff, you're actually paying them to keep your money, which doesn't make any sense because the money is losing purchasing power all along anyway. Plus, you have all of the other risks. You have the risks of bail-in, bail-in where the bank takes depositor money in order to stay afloat. Now, that's more of a risk over here in Europe than it is in the United States at the moment. But if push comes to shove at some future date, and they see bail-ins taking place in Europe and in other parts of the world, why not impose a bail-in the United States to bail out some big bank that fails rather than impose a bailout on taxpayers? So the banking system today has got some serious problems, and the best thing to do is to try to avoid the banking system wherever possible. Is basically the bottom line. It still makes sense to save money. Mm-hmm. It just doesn't make sense to save national currencies anymore.
All right. Now, cashless society. I've came across several articles over the last couple of days where it seems like the hint at a cashless society is really increasing, and it seems like everything's kind of initiating or starting in Europe. And they're really doing some tests with Europe and those Scandinavian countries. It seems like. What are your thoughts on cashless society? Do you think that will be inevitable, as well as the negative interest rates to kind of keep things afloat?
Yeah. Politicians are going to try to make it inevitable. Yeah. Even here, just recently, Germany's been trying to put a limit as to how much cash you could do in any one transaction. Mm-hmm. Some European countries already have that, as to how much cash can be used in any one transaction. Governments don't want you to use cash because they think that if you're going to use a cash transaction, it's not going to be reported and you're not going to be paying taxes on it. Now, there may be a small percentage of tax avoidance, but there's a bigger issue. It's not really the tax avoidance issue. It's governments want to control you. They want to control the economy. If they can control the money that we use, they have that control over you and the economy. And people aren't going to like it. So at the end of the day, what will probably happen is if there is even more movements to a cashless society, people will come up with other alternatives to do whatever they want to do. Simply because people don't like to be told how to live their lives.
Well, James Turk, it has been a pleasure having you on to discuss some of our problems as well as be able to present some solutions for those that might have an interest in diversifying a little bit. So give the audience a chance, I guess, to stay connected with you and how to follow your work and things like that and what things you have coming up or going on.
Yeah. Well, again, you can take a look at bitgold.com or goldmoney.com, which I was the founder of. And I do things from time to time, interviews like this, which I publicize through my Twitter handle, which is at FGMR. So I welcome you to follow me on Twitter, and I'll give you an update as to what I'm doing and what I'm thinking.
All right, James. Well, great talking to you. Look forward to staying in touch with you, and thanks for sitting down with us.
Yeah, happy to do it, Mike, and let's plan to do this again in the future.
Sounds good. Looking forward to it. Well, I hope you enjoyed my conversation with James Turk. Please click the subscribe button below for more RTD interviews to come. Also, visit rethinkingthedollar.com/blog where you get a chance to read some historical articles that I post on a weekly basis. Looking forward to bringing you more RTD interviews. See you later.